This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your Tuesday afternoon edition. A little bit different, right? This whole week is going to be different, let's be honest. We had a Forex show yesterday, which was a little bit out of the norm. Normally, Tuesdays is our Forex session, but today, we're not going to have a Forex kind of show. We may talk a little about currencies today, but we're going to have Michael Young on the program. Spent many years on the floors out in Chicago. Still out in Chicago today, I believe, teaching some classes. We'll definitely let you know about his upcoming teaching schedule, but we'll go through a few listener questions that have come in over the last 24 hours for Michael. One good one came in from Heath in San Francisco about natural gas. If you have anything else that you would like us to cover, let us know what they are, and we will get to all of those as we can on today's show. Of course, big shout out to all of our YouTube family. We've got Dana and Gayer on Online Trading Academy's YouTube page. Hello, guys. And of course, I know we've got our active group out there because I can see you lurking in the shadows on Power Trading Radio's YouTube channel. You guys will start talking, become very active here soon enough, I am sure. But anyway, I'll be monitoring the chats for questions and comments directed to me. So if you have one, send it on in. I'd love to get as many questions as I can today, and hopefully answer them all. All right, housekeeping again, since we've only got a couple days left. We are hosting a webinar. Of course, we do about once a month. We'll do a webinar. Mainly, it's on topics that you guys send in. The easiest way to send in a topic is to go to otacademy.com. Right at the bottom of the page, you'll see like a little red chat box. If you click on that one, you'll see it says feedback. You can type in topics you would like us to either to create content for OT Academy or a webinar that you would like us to cover. You'll notice right in the front page, since TJ has the page up full screen for you, 2020 Vision, the top 4 events that could impact investments in 2020. That will be our webinar for Thursday, December 12th, a couple days away. That'll be at 10 a.m. Should go for about 30 to 45 minutes. Obviously, there are hundreds of different events which are going to move our markets in 2020, but there are 4 that we've kind of boiled it down to that seem to be the most significant impact potential. We'll let you know what those are. And of course, it is fully interactive, so I would encourage you guys to join us in our discussion on Thursday. All right, let's start things off with our worst performer out there. It seems to always find its way either to the bottom of the list, which it's been pegged to recently, or sometimes even the top of the list. I'm starting at the bottom today. I'm going to work my way up to the top for our top 7 markets out there. Worst performer today, 24 hours? Bitcoin yet again. I know, shocker for many of you out there. We'll pull this back here. Well, we got all kinds of numbers flying around the screen. There is your Bitcoin chart over the last 24 hours. Not a big down day. It looks much more dramatic than it really was. You were down 1.13%, dropping $82. We'll round it to $83 slide to $7,235.51 per Bitcoin as we speak. Of course, by the end of the show, that will be some other value, and it'll probably change significantly in the last by the end of the show. All right, let's go to your next one, TJ. That was number 6 was Bitcoin. So S&P 500, if you wouldn't mind bringing that up for the viewers on click. There's your ES, the S&P 500. Technically, follow through from today. So we actually did get a nice follow through to the downside. You can see this candle had a long bottoming tail, which actually erased all the gains from 2 sessions ago. But then started to rally a little bit and recouped some of those losses, ending the day down, but not very much. It was only down 0.11%, finishing the day at $3,132.50. All right, I had something else I want to add in there, but maybe not. I think it's what I wanted to add is up 1.5 points in the after-hour session. So slightly up, but still down on the day. All right, TJ, go from number 6 to number 5. We're sticking with the indexes here. NASDAQ 100 is what you're going to view now. Identical chart to what we saw with that S&P 500. We had some early weakness, finishing off with some strength here and closing almost unchanged on the day. It was down 0.07% for the composite. That finished the day at 8,616. So all in all, a rather quiet day when you look at the end-of-day numbers here for the NASDAQ. Okay, crude oil also in action, but to the upside here, we had a 0.12% increase in crude oil. That's a gain of only 7 cents, so nothing dramatic. But you'll notice it's a little bit of a follow through. We did have that what's called a hanging man pattern here yesterday on the candle. Today broke that to the upside, which of course is a positive sign, although the follow through wasn't very strong. We still have that session from 2 days ago to focus on as far as a ceiling. Once that's broke, then I think we could see some significant moves to the upside here quickly. But right now, it doesn't feel like it has a lot of momentum, even though it was a positive day. Crude oil finishing it, as I mentioned, $59.09, a gain of 0.12. All right, now we had some economic data today with regards to the small business index. It was 102.4. They expected it to jump to 103.1. Boom, we exceeded that, 104.7, which is probably why we saw strength in the Russell today. Obviously, that small business index is made up and comprised of many Russell components. You see that small little green body here on this candle, which pushed it into positive territory, so it was better than the S&P, it was better than the NASDAQ, finishing the day up 0.13%, again of only 2 points, but at least it was positive, right? 1,671 is where it finished up at, and of course it is still kind of stuck below the ceiling here. I say ceiling, it's really like, 1640, can't seem to really get above that. If it does, you might see some pretty quick moves to the upside. So we've got a couple of indexes here, guys, that are really sitting right at points where it just feels like they want to break and go higher. We'll have to wait and see. Maybe the remainder of the week will bring them to some new highs. Of course, we have some major announcements happening this week as well. All right, that was your bronze medal winner with the Russell 2000. We're going back to Treasuries. The ZN is what I want to look at now. The Treasury prices, as you can see here on this chart, was a red candle. So you're going to see a slide in the price of that 10-year note. That's because yields jumped 0.22%. I say jumped. How about inched forward 0.22%? It went to 1.833 for the 10-year yield, which is going to continue to push this chart to the south side if those yields keep rising. All right, number one on the day goes to the GC. Gold, that's it, 0.26%. So 1/4 of 1%. That's coming off the heels of this nice little sell-off right from an area of supply, although it hasn't maintained a new low. It hasn't gone lower than a previous low. So this is actually, for those of you who might be longer-term bullish on gold, to me it might actually be rather positive for gold because it's not making new lows. Although you look at the trend going all the way back into into September, yeah, it's lower highs, lower lows, but I'm really thinking that this may be a stability point, a turning point for gold. Keep an eye on it. If it starts to break these lows below, let's say 1454, then of course we would achieve those previous lows and making new ones. So right now it actually feels okay. It feels like gold may be stabilizing here a little bit. Of course, we'll only be able to tell as time progresses and this chart continues to show more activity on to the right. All right, that's it. That's your top 7 markets out there. Hopefully one of those put some green into your pocket on a great day like today where there wasn't that much movement. Hopefully it did. Marita says, can you post the link to register for the webinar? Just go to otacademy.com. I can't post links. Maybe TJ, since you have moderator, or Joanne, if you wouldn't mind, could you post that link in our YouTube channels for the webinar for tomorrow? On where to register. Go to otacademy.com. It's right on the front page. It's easy, but maybe one of my assistants will post that link for you. Okay, Lee sent in this question. It's an interesting one. You know, we always seem to get around holiday time some new fad, some product, some device that is the hottest item for Christmas. And if you go back, pick any period of time. Go back 5 years, 10 years, 20 years, 30 years. It always seems that right around Christmas time, there's this hype that, you know what, next year is the year that I'm going to get myself into shape. You know what, I'm going to start January. It's going to be a New Year's resolution. And you know what, I'm hoping that somebody buys me a stationary bicycle for my house because I'm going to ride my bicycle in my living room every single day and get in shape. Come on. Don't fool yourself. You can go on eBay in February and see that probably 50 to 60% of those things are just sitting out there on sale because nobody rides them. They realize, why did I waste my money on this? Lee says, I'm seeing a ton of ads for Peloton going into Christmas. Would you buy PTON? Well, you know, TJ, bring up the chart of PTON here. I think you guys can hear my cynicism on this one. This is the Peloton stock. I absolutely would not buy Peloton. If anything, I would actually be shorting Peloton. I'd be looking for opportunities to unload short on Peloton because do you really think that this is the revolutionary new idea that's going to take over? Now it's a stationary bicycle that interacts with you and motivates you. I think it's great if you're one of those focused and determined and dedicated people. But you know what? I have a gym membership. I'm going to be going to the gym. I enjoy going to the gym. I'm not going to be using Peloton. That's just me. For some people, I know that they do like to use stationary bicycles, but do an impromptu survey of all of your friends that you think have a stationary bicycle of any kind and ask them, how often do you use it? My guess is probably not very often. It's probably in the garage buried underneath a bunch of other stuff that they just haven't used in a long, long time. Now, there is another one out there which I find actually to be rather appealing for me. I don't really want to ride a bike. However, I do like to work out and I enjoy working out at home. P90X was a great product for that. But there is another one out there called the Mirror, which unfortunately is not publicly traded. That one I actually like because it looks like a normal mirror, but I can actually turn it on and it gives me workouts right there. Not on a bicycle. It's push-ups, pull-ups, jumping jacks, all that kind of stuff. To me, I like that one a little bit better. But long-winded answer to your question, Lee. Would I buy Peloton? Absolutely not. If you gave me money to buy Peloton, I would probably go and see if I could short Peloton. I'm questioning the liquidity of it. It may not have enough liquidity for you to go short on it. Maybe you can buy some puts on it, but no, I wouldn't touch Peloton. I think you go into January, this thing's just going to fall apart and go back down. It'll be, what was another big one that was a failure? GoPro is one we talked about in the program quite a bit, where I said don't buy GoPro, just short it, and no, GoPro's falling apart too. All right. Now we'll do it. And that's just my 2 cents. Hey, if you are a Peloton fan and you feel like you're going to go buy that bike, awesome. It's more important that you buy the bike and get the most out of it than think you're going to make a ton of money on the stock, because I really don't see this being the new pet rock of 2020 that everybody's going to have a Peloton bike. I just disagree with that. But I'm sure we have some haters out there that think differently. All right, let's take a quick break. We come back. I will have Michael Young on the phone. We're going to talk about whatever it is that you guys would like us to discuss. I do see some natural gas questions. I don't see any questions coming through on our Power Trading Radio or YouTube panel. Oh, well, hold on. Has some very engaging adaptations. Okay. Yeah, Gizmo, no Peloton, stick to the gym. I agree. How boring, go for a walk. John, see, that's just the easy one. How much does a walk cost? It's free $99. And if you really want someone to cheer you on, just get your neighbor or friend to walk with you and say, yeah, come on, faster, you can do it. More steps. I don't know, I think Peloton's kind of a joke. Anyway, guys, keep those questions and comments coming in. We appreciate it. Michael Young will be our guest when we come back right after a short break. So send them on in at powertradingradio.com by clicking Power Blast, and we'll be right back.
There are lots of different reasons why I teach. I know what it's like from the beginning because I was a student here. I love going around the classroom and you get those aha moments where, slowly those light bulbs switch on as the week unfolds. And for me, it's magical.
I've been telling students for years that I derive professional satisfaction from sharing my knowledge about trading. I grew up on the floor of the Board of Trade. My father was my first mentor.
I like to see people run. And in order for them to run, they need to walk well first. And for me to help them build a solid foundation and then watch them go forward, that's something that money can't buy.
What these people are now realizing is the freedom that they have always wanted to achieve. And it's a quite humbling and honorable experience to be able to know that in some small way I contributed to them.
The students make the academy. And I meet wonderful people from all walks of life, and they always have a story to tell. And the story is always interesting.
Being able to explain things in a way where the light bulb goes off, and that gives me the chills. It's a wonderful experience to see that growth in somebody else and that you're a part of that. It's magic.
The students, I really want to enable them to bypass the challenges that everybody goes through.
There is rather a selfish aspect, and that selfish aspect is I have found more of me as a person. Just a self-discovery.
And in every class that I teach, I get to share my knowledge, and I get to see each and every one of my students learn how to trade in a bull market and in a bear market and even in a sideways market. And each time I see that student of mine take that first trade, it's such a rewarding experience. It's awesome.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello everybody, welcome back to Power Trading Radio. It is your Tuesday edition. Today we have a little bit different show. Normally it's Forex. Today it's futures and maybe end of year review, wrap up. Part of our jobs as traders is to analyze what we've done for the year, find out our strengths, our weaknesses, and build on those things. So we might talk a little bit about that today. Of course, if you have something specific that you would like us to ask, let us know what it is. Send them on in at powertradingradio.com. Click the Power Blast or join us on our chat on YouTube, which is Power Trading Radio or Online Trading Academy. Our guest for today spent many, many years out in Chicago. Of course, he's still in Chicago, but spent many years on the floors in Chicago, which, of course, now are the things of legend from movies and things like Trading Places. We got Michael Young joining us today. Michael, how you doing?
Great, Merlin. How you doing?
Wonderful. Always a pleasure having you on. I feel like I feel like you're my Army Reserve. I get a 1 weekend a month with you.
Well, I always love the intro, and it's I miss you. I haven't been on in a while, but we always seem to be talking at the end of the year when we're just starting to wind down and look forward to the next year. So I'm glad I'm on the show.
Yeah, I'm glad to have you with us. I asked this question of Rick Wright yesterday, and I just want to kind of keep a consistent thing this week, just because of. I think we all have different approaches. We all have different styles and ways that we attack these markets. This week is a very interesting one, right? We have tomorrow. You have a Fed announcement coming out, which is pretty telegraphed. Everyone's expecting a specific number. We have UK elections. We have Swiss National Bank coming out with a rate announcement. You have the ECB coming out with a rate announcement, and of course, anything to happen with trade war. As you know, the tail end of the year generally starts to lose liquidity. Things start to slow down as a lot of big traders go away, which adds a dimension of volatility. Do you change your trading plan or modify your approach to the markets because of those factors, low liquidity and all of a sudden a plethora of major market-moving announcement potential?
Yeah, it's interesting because, the end of the year does tend to kind of slow down, and I think we all kind of want to slow down too. We've had a busy year, whether it's trading actively or traveling. You're doing the show every day. It's nice towards the end of the year to relax a little bit, but these markets are definitely still trading. And today was a great example of just a pretty slow day. Nothing much happened. So when you have all these announcements starting to stack up for the next week or so in an otherwise quiet time, I actually look forward to that stuff. Not because I'm trying to be like kamikaze aggressive, but I think when those kind of announcements are coming out, we just go to a little bit larger time frame. We look to sell and buy as always, but we give ourselves a little bit more room, looking to sell a bit higher, buy a little bit lower. I mean, that kind of factors in the potential lack of liquidity, but there's no reason not to be participating in these moves. So I'm all for it.
Yeah, and that's why I asked, because my 2 cents on that is I'm pretty much in line with you, although I have found that for me, holiday weeks are generally very poor performers for me. And it's funny because I see Brendan, welcome back, Brendan, one of our regulars. He's saying low liquidity times are awesome for him. That's great. For me, I don't know, for whatever reason, I find that my results aren't up to snuff on holiday weeks. I don't know whether it has to do with light liquidity, my order execution, or whatever it is. So I tend to scale back around the holidays. The last 2 weeks of the year for me are an absolute ghost, and I don't make any trades at all for the last 2 weeks because it's just such low volume out there. But with these announcements,
but what you're saying is making perfect sense, because you're analyzing kind of your strengths and weaknesses, and you're just playing to it. So I'm all for what you're saying as well. I think if there's going to be less liquidity, we just don't trade as big, and that's one very easy way of dealing with it.
It's funny because I think that a novice might look at trading and say, well, what difference does it make? If you know how to trade, you should trade in any market, in any volume. And I have it's hard for me to answer that one because, as Brendan was saying, that's where his bread and butter is low liquidity. Here are two people who are trading, and what works for one person is not working for the other. And you have to kind of shrug your shoulders and go, I don't know why the heck it works that way. It's just the way it is. The good news is that Brendan and myself have identified those times and said, okay, if I've identified that this is working for me, then I'm seeking out those opportunities. I'm looking for those low liquidity. For me, I need the higher, more active traded days and volume, so I'm going to go out and seek those and make sure I don't pay the price that I seem to have been doing historically by trading low liquid days. So good for you, Brendan, and others out there. If you haven't figured out where your strengths and weaknesses are or how you trade with different types of market dynamics, I would encourage you to do so. It will probably benefit you in the long run. All right, I've got a couple different. I'm going to get to this one before I forget, because I always tend to forget questions from viewers. And he just said this one. Dave, one of our regulars on Online Trading Academy's YouTube page, says, "What do your Online Trading Academy's subject matter experts say when the markets are going to have any type of correction, and what do they say how the markets will be in 2020?" So, we all have opinions about where things are going to go. Certainly we don't need to make it political, but there's opinions about how you feel these markets are going to operate or things you might see. And we get it all the time. When's the correction going to happen, and what do you see happening in 2020? I guess is a very vague, open-ended question, but do you have any thoughts on this upcoming correction, which I do think is coming at some point?
Yeah, I mean, we've been talking about this for a while. You look at the U.S. economy, we're really entering the late extra innings regarding this rally that started in 2009. I mean, it's not being political to state that there is a fact. There's going to be an election in November, and clearly, the result of that election is going to have a big effect on things. What we tend to find is that, markets bottom on really bad news, and markets top out on really good news. So, my belief is that this top that we're expecting at some point, it could come at any time, and it's not going to just come out of nowhere, though. That's the key. Right now, shorting the equity markets in the U.S. makes no sense because there's no evidence yet that that any kind of a potential top is in play. Our job is to listen and pay attention. And, all it's going to take is a few, down moves. Then there will be overhead supply that starts to form. Then we will have high probability, low risk reasons to short the market. So I do expect a lot of volatility in 2020. I do expect there to be a top that's put in, a significant top at some point. But I'm just trying to kind of just go with the flow. And right now, equity markets are still looking strong. I'd still rather be a buyer on a pullback than try to pick a top. The market will show us at some point when that top is in.
Yep. And for Dave out there who asked this question, I'm sure many of you get it, especially if your friends know that you are in the markets. Like, hey, when's the next crash coming? I had a very interesting conversation with a great trader who I have utmost respect for yesterday, and my eyes widened the size of saucers when he was reading off some of the statistics. And I won't mention his name. Well, if he wants to share that on the air, I'd love to see it happen. It'd be fun. But he's been trading a long time, seen a ton of markets out there, and I personally believe that we will see a recession start in 2021. I think next year will probably be a rather good year. I don't think that an election year is going to derail what's happening. Of course, we have a lot of things on the table which could potentially hinder that if there's any sort of impeachment process or whatever.
That is true, right?
Right. And, I mean, and can you imagine, I don't even want to say this because I don't want to make this a political show, but, what happens if the Democrats win and which Democrat candidate is winning? I mean, that could have a huge impact on the markets. But this individual said that they felt that there was the potential, and I could not believe I was hearing this, but he actually went through and gave point-by-point statistics and case for it on why you could see an 80% drop in the markets before the election. And I was like, oh my, 80% drop? You're out of your mind. But the argument was sound, that technically, if you look at where we have come from and where we're at, if you just go back to a reversion to the mean and down to trend lines, he said it was 82% down. Now, I don't think that will happen. From July to November, that's a monstrous decline. But I'll tell you what, I would give him all the props in the world if all of a sudden we had a massive market crash next year between July and November. I don't see that happening. I think there's too many pieces that they could pull the quote-unquote Trump card and bail a market out through this theater of reality TV that we are in right now. But I think 2021 is the year where you start to see the results of the bond bubble, the housing bubble, the equity market bubble start to crumble and fall apart.
The thing about the market is it generally goes from point A to point B with the least amount of people on board.
Yes.
So, it tends to do what most people don't expect. So, if we start reading, and literally lately, everybody that I'm starting to see, all these institutions making their, prognostications for 2020. This one thinks it's 8% up. This one thinks 10%. Yep. I'm not seeing anybody right now saying down. So, we are contrarians by nature, and, we're going to have our day. We are going to have our day.
Yep. I'm looking forward to it because it will create an ultimate buying opportunity when the bottom drops out of these markets again. It's just a matter of when. Hopefully, for everybody out there, we don't get stuck too much in our ways and say, well, it can't keep going lower. It's got to keep going higher. At some point, you're going to have to switch that thinking. And I'm right there with Michael at this point. I hate to say it, but I'm a continue to buy the dips, right? It's the market's trending up. It's at all-time highs. It's making higher highs, higher lows. So just buy these pullbacks for now. that story may change here going forward. Guys, Michael Young is our guest today. When we come back, I got a question from Heath on natural gas. We'll take a, Heath? Yes, it was Heath. Heath wants to know about natural gas, so we'll take a peek at that one. If you guys have some questions for us, let us know what they are. Send them on in at powertradingradio.com. You can click that little Power Blast button to send them on here in the studio, or join the discussion. We've got a pretty active discussion on Online Trading Academy's YouTube page, as well as Power Trading Radio's YouTube page. Stay tuned, everybody. We'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Welcome back to Power Trading Radio, everyone. It is your, I don't even know what day it is. It's Tuesday edition. We've got Michael Young joining us from Chicago. I know that Michael trades a wide variety of asset classes, but I did see a question come through. Let's see, let me make sure I get this one answered. This was, I believe, on Power Trading Radio's YouTube channel. It goes way back. It was asking about soybeans. I don't trade soybeans, but let me see. Where was I? Want to give the gentleman props if it was here. I think maybe it got taken out. I don't know why that one would disappear. But we had a question about soybeans. Michael, do you trade soybeans at all?
Honestly, I don't, but I'm going to put it up on the chart right now. We'll take a quick look at it.
For the viewers at home, you're looking at now, it's the @ZS symbols, what we're looking at here for soybeans. Beautiful, honestly, a stunningly beautiful chart over the last 6 trading sessions. I will give it that.
Let's see. Revert. I'm on click right now. So is that?
It's the //ZS.
ZS?
Yep. And you guys can see it's had some pretty good, Zeta Sam, :XCBT. There you go.
Got it. All right, well, I mean, it's funny. I'm on a daily chart here, and the first thing that my eyes see, there was a beautiful explosion and beginning of a demand zone, I'd say in the beginning of September. You see the beginning of that massive green candle on the daily?
Yeah.
So 7 days ago, soybeans got massacred right down to that level, and now we've had 1, 2, 3, 4, 5, 6 straight up days, and in another day or two we're going to be at supply. So I mean, whether it is soybeans or oil or Microsoft, it's like core strategy. It is unbelievable how accurate this can be, and we're just looking for turning points. Right at the moment, soybeans, we're significantly higher than that low that was put in May. We've just had a pullback to a nice demand level, and the market is moving up. So, I'd be just looking at this. I'd look to be buying on pullbacks at the moment.
Yeah, and I agree. Michael's is always right. I don't trade soybeans.
I don't know about that.
For the most part, everything I've worked with you always seem to be spot on. I'm kind of like Brendan made a good comment. I actually should give you some props for that one, Brendan. It was a good comment. He said, where does it says? I like to. Oh man. Where was it? There's so many comments coming through, I lost it. But basically, the gist of it was, look, I like to trade things that make me happy. I like to trade things personally that I know about. I don't know about soybeans. I actually enjoy eating soybeans, especially while watching TV, because it's like popcorn, and it's just much easier and better for your teeth. But I don't know the geopolitical climate. I know that right now soybeans are a crazy volatile commodity with what's going on with the tariffs. I know that all of a sudden they're talking about getting China is now talking about getting soybeans from Russia and Brazil, so that could cut into ours. I don't know. I don't know enough about this instrument to trade it effectively, although, Michael's right. You look at the supply-demand zones, it's been respecting those and having some great opportunities. So for the gentleman who sent this comment in, I don't know where the question went, but I don't trade them. I think it looks great. I think Michael's right. You've got a supply level coming up here, which could be a potential turning point. But again, this is one that's so significant with regard to trade tariffs. It was one of the original ones that we started talking about with regard to the trade war. And I think it's still a major player out there. So to me, it's just too much volatility for me to put it on my trade list. But that's just me.
Marlon, let me just say that with soybeans and some of those types of commodities, you have these daily limit moves that get employed in the market. So it does add a level of risk that we may not want to deal with.
Yep. All right, there was that one. Let's see. Dave says, can you help me understand contract expiration dates, specifically when we must close out our trades, what key date we need to watch out for?
Yeah, I think, when in the futures market, you have what is called a rollover period, and then you have the expiration date. And generally, it's the second week of, the contract expiration month. So, here we are. We're already approaching that in December. So when the rollover period starts, it's a week prior to the expiration, and it gives people a chance to exit and close out the contract that will be expiring, and then either roll it into or just start trading the soon-to-be new contract, which will be the March contract of 2020. And I think the third Friday of the month is the actual expiration date. I think the second Friday is when that rollover period starts. I may be off by a day or so, but, I'm just always focused on trying to trade the contract that has all the volume, simply.
Right. I was going to say that's it. So there's two things here, Dave, you got to really pay attention to. Number one is it a cash-settled futures contract or is it physical delivery? Because there are still some out there that are physical delivery, which, depending on your broker, most aren't going to let you get physical delivery, but you might, depending on your broker. So really important that you know those, because if you carry it through expiration, who knows, you might end up with a whole bunch of commodities lining up on your front porch, which seems to be something out of folklore, but it could potentially happen. What Michael just said right there is the simplest way, is basically just look at the charts, right? So if you're looking at a contract-specific futures contract, if all of a sudden you see the volume drop significantly and then you look at the next month and or the next contract and that's where all the volume went, then that's when you need to switch. You really want to go, whichever one has the volume, that's where you want to go to. It's like, which swimming pool do you want to be in? The one that has all the water or the one that just got drained? You want to be in the one that has all the water. Jump in that one.
You always have the best analogies, Marlon. I love you for that.
They're pretty terrible at points, I will admit. All right, let me get to this question from Heath. This is natural gas. It doesn't really say too much here. Heath just says, I would like your thoughts on natural gas. Look, we had a huge drop down a couple days ago on natural gas. Tell me your thoughts on this one. I've got the daily up here right now, and if there's any levels or thoughts that you might have on natural gas.
Yeah, obviously, you look at the last couple weeks. It's been in a pretty well-defined downtrend, and it's kind of been in a downtrend all year. And when you look at it starting to get near this $2 level again, this is very low on the curve.
Yeah.
To me, I'm looking for places now to start being a buyer. Now, if you look where the market closed last Friday, and then we had that huge gap down yesterday morning. And the gap really came right down to and touched that 2.169 level, which was a really strong demand zone from August of this year. And, now we have to watch it and see. Can it mount any sort of a rally? Can it start, making a few higher highs, higher lows? If this isn't the right rally, I think we have another really good daily level below it, which is 2.070. I am not looking to be a short seller anymore of natural gas. I'm just waiting for the chart to tell me that, we have permission to buy it because, this thing topped out at 480 a couple of years ago. And, this is just a long-term trading range. So I'm going to focus on the buy side, let the market tell us where.
Yeah, Heath, I concur. There's something definitely interesting that's happened with natural gas since August. So what Michael's talking about, you go back to November of last year, so literally a little over a year ago, you were at 490, 480. That's a hell of a move. And we know that the U.S. is a major producer of natural gas, and it's just, that's obviously been helping the prices. But notice right here, to me, everything changed on September 6th. On September 6th, we technically broke a downtrend line. And we started making a higher high, which is great, but then we sold off, but we didn't make a higher low. So this, to me, actually, I agree with Michael. I wouldn't even consider shorting right now. I think this actually looks like a potential buying opportunity. The question is, are you aggressive and buy, at current prices right around, 226, or do you wait, maybe try to buy a little bit steeper down? I'm not sure it's going to get there. I think that this is showing a lot of strength. Of course, we are now entering the winter months. I do know that there was significant inventory, huge inventory built up in natural gas. So if we don't get the ice age on the East Coast like people were expecting, then you may see this drop even further. But they were planning for a very, very cold winter and had a ton of inventory with natural gas when I was looking at the inventory data. So I'm actually bullish on this one, but be careful out there because if the storms don't come, you're not using natural gas much. So. Michael, tell me a little bit about your upcoming schedule. I know you mentioned you're out in Chicago teaching some online classes. Where's your schedule going to put you next?
Tomorrow I'm finishing an online market timing class. Thursday I'm going to Minneapolis. There's a beautiful center in Minneapolis, and it's going to be my last class for the year.
Nice.
Take a few weeks off. I'm going to go to New Orleans with my family, and then January starts all over again. So I continue to just be incredibly enthused about the opportunities in this market, and it's time to recharge our batteries a little bit and get ready for next year.
That it is. So in Minnesota, are you teaching a class up there?
Yeah, it's a market timing class.
Okay.
And it's going to be it'll be a Friday, Saturday, Sunday class.
Cool.
And I just can't wait to do it. And actually, I'd like to just, if you don't mind, give a very quick shout out to Jeff Manson. He's one of our excellent instructors. As part of teaching my class today, I was watching and utilizing the levels that he came up with today in the Futures XLT. And, it was kind of a nothing day in the market, but he picked the exact high in the S&P Futures contract. And that was his supply zone on the prep screen. So, again, just incredible instructors, and the ability to just know where these big orders are. That's what this is all about.
Nice. Well, yeah, and that's not just Jeff. There's so many other great instructors out there. I always love.
They're all great.
I know, but it's funny because you look at somebody like yourself who's been doing this for, suffice it to say, a very long time. I think that somebody starting out would be like, well, why would you even care? Why would you even watch his session? Why do you watch, what a Brandon Wendell or a any instructor? You know it. You got it. Why would you watch Jeff Manson?
Right. Well, for me, it's simply that, I'm getting a little bit older, and it's not to insinuate that I'm lazy, but sometimes I'm lazy. So rather than looking at all the charts myself, if I can network and share in the ideas of people that I really trust, I am all about saving time. So that's why I still do it.
Nice. Well, shout out to Jeff Manson. Shout out to you as well. I want to thank you for all the hard work and dedication you put into all your students over the years. It's always heartwarming and great to watch your students react when you're in there teaching. You always make me smile, and I hope you and your family have a fantastic holiday season, because I probably won't talk to you before the new year, Michael. So thank you for all that you do, and I look forward to talking to you in 2020.
Thanks for having me on the show, Merlin. Talk to you soon.
All right, take care.
Bye.
Guys, with Michael Young, one of our rock stars on the Trading Academy, just one of the simple, down-to-earth people who's got a great, simple trading strategy. Been trading on the floor of Chicago for a long time, and then had to make that transition from physical floor base, which is really about knowing people and saying, okay, I know that guy, and watching their reactions, to screen base, where all of a sudden you don't know the people, and you have to kind of figure out new ways to identify price turning points and movements. That has been done with supply and demand and understanding that there's a market timing aspect to it, and Michael is definitely one of the biggest practitioners of it. If you would like to participate in one of Michael's classes, he mentioned his last one for the year is a market timing event up in Minnesota. If you are in the land of lakes, You can click that link that's going to show up in your social media channel right now. That will tell you more information about which center is closest to you. Of course, there's 48 physical brick and mortar schools, but as you heard Michael say, he's doing an online MTO event or market timing event, and you can register for those as well, so you don't have to be near one of our physical centers. It's just always nice to go down to the centers and meet the staff, meet the traders, sit in there and kind of have that sense of community around you, which is one of the things that's missing for most of us as traders on our own. So again, click that link showing up in social media. If you are listening to this on your Amazon podcast, or Amazon, that foreshadowing, right? On your iTunes podcast, you can go to powertrainingradio.com. There's a little link in the upper right-hand side of the screen that says free class. Simply click on that one. You type in your zip code, and that'll tell you which center is closest to you. All right, I'm not going to take a commercial break. I'm going to go straight through here because I got a ton of stuff I got to take care of. And you know what? You probably don't want to see a commercial right now, do you? Let's go to your economic calendar for the 11th. Wednesday the 11th brings us a big day. For the U.S., the biggest thing is going to be our Fed funds rate. Right now, there's a 99.3% chance we are going to stay at 1.75%. Don't see any change in that. That is almost baked. If there is a change, boy, you're going to see some crazy move in the markets, but I don't believe you'll see a change tomorrow. We also have unemployment claims and crude oil inventories, as well as core CPI numbers to see if there's any inflationary data on the horizon. For the euro, German final consumer price index, British pound with the RICS house price balance, Aussies with the RBA bulletin, and finally for New Zealand, FPI data. Earnings calendar for Wednesday brings us Lululemon Athletica, Nordstrom Corp, American Eagle, Oxford Industries, Photronics, and Bluebird Corporation. Those are all the company. Well, actually, there's more than this reporting earnings tomorrow, but those are just a sampling of them, so be careful if you are looking at an earnings calendar. Always check your earnings calendar. Don't get caught off guard. Let's see. Our guest for, Mr. Moses. We'll have Steve Moses on the program tomorrow talking options. I'm excited about that. He's always one of my faves on the program. Of course, I always love somebody whose favorite drink is scotch. Steve Young will be Steve Young. I'm a 49ers fan, can you tell? Steve Moses will be our guest tomorrow. If you have any options questions, feel free to send those on in at powertradingradio.com. Of course, that's the way to get all your questions to us. I'll start off tomorrow by going through one from Unscammable, which is asking about a specific rule that the SEC does with regards to insider trading and share buybacks. So that'll be starting tomorrow's show. Until then, happy trading, everybody. We hope you have a fantastic day out there tomorrow. If you'd like to learn more about options, futures, forex, commodities, real estate, or how our community can help you and educate you in these financial markets, click that link. Until then, we'll see you tomorrow. Take care.